At MB Capital, and he joins us to talk a little bit more about the stocks that are in the news at the moment. Welcome, Marcus.
Hello, good morning.
Miners, let's start with them. Do you buy miners at the moment, or don't you touch them because there's simply too much dollar volatility?
Well, there's a lot going on at the moment. As you already mentioned, African Barrick Gold, with their fuel theft, unfortunately for them, are bottom of the FTSE 40s, as you just mentioned.
Yeah.
Rio Tinto, though, on the other hand, good results this morning. Record production for the third quarter for iron ore, coking coal, and also, as the Americans like to call it, alumina. However, their gold and copper mining was a little bit off from their last sort of quarter in 2009. So, a bit of a mixed bag. The market has taken it well. Miners are up. However, if you sort of look at it for where we are with Rio, it's coming up to year highs, just breaking them, and this FTSE pushing towards that 5.8 level that we saw in April. I'm wondering, is there much further that we can actually go? So it'll be interesting to see if we do start taking a breath. It's very mixed out there at the moment. We've got sort of quantitative easing in the US, and then our austerity measures waiting for them in the UK, and I don't know if people really know sort of where to go next.
So do you go for the kind of the dividend strategy? The companies that are paying out strong dividends are indicating that they're going to come back to that. Is that where you park your hopes?
I'm sort of looking at things sort of relative what the index is doing, because I'm sort of looking short to medium term. WH Smith, as you mentioned, had better than expected results. If you look at them compared to their index, they've been relatively underperforming it, so they've got about another 10% to go. So I'm sort of looking at stocks like that in the strategy rather than the mining sector, which it's kind of all over the place at the moment.
Would you buy miners now, Max? Are you optimistic on them?
I think the point that our commodities team would make is that it's not really about short-term quarterly results or the news of today. It's about the sustained growth of demand, which has been in place for the last 10 years and is likely to remain in place as a result of globalization and the emerging markets. And that sustained growth in demand is driving prices up. And yes, supply is catching up, but the mining companies like Rio Tinto are all slow to respond, and they don't want to open up a new mine and increase investment until they're quite sure that the rise in price is going to be sustained. And that promises a pretty healthy outlook for the mining sector for some time, which is what our funds have benefited from.
Yeah.
I mean, turning to Smiths, actually, that's also an interesting story, a separate story, but an interesting story. Actually, it's our UK funds have done very well this year. One of the reasons is that at the start, early in the year, when everyone was talking about buy the overseas earners, they said, well, actually, everyone's buying the overseas earners. We're finding good value among the domestics and some of the domestic retailers. And it sounded slightly weird and odd at the time, but actually it's worked very well. And it just shows that this year, sometimes rather than following the crowd, you have to actually sort of step back and say, where is the value, and and not be driven by the macro stuff.
Stay close to home sometimes, I guess.
Well, not be driven by the macroeconomics and the broad chatter in the street.
Well, Marcus, speaking of the macroeconomics and the broader chatter, I mean, we're potentially looking at the Fed with another round of quantitative easing. Do you think that we'll see a significant impact on the markets from this? I mean, there's a reason to just think, oh, I'm going to be short-term in and out of the markets up until this next Fed decision, and then I'll make a longer-term strategy plan.
It just seems already priced in. I mean, everyone's expecting it now. After the jobs data on Friday for US non-farm, they were so bad that the market went up because everyone's expecting quantitative easing. I'm just a little bit dubious of how much further this can actually push. And it's almost one of those buy on rumour, sell on fact scenarios whereby when they do announce it, will that be enough and everyone starts taking profits?
Yeah. Marcus, thank you very much. Marcus Bullus, the trading director from MB Capital.